We just think over the next 6 to 12 months, there are a set of risks coming into focus that means the U.S. is going to perform a little more in line with the rest of global equities rather than continuing that streak of outperformance, whether it's the...
I'm placing a new order to buy Japanese yen at 107.061. So order placed to buy Japanese yen at 107.061.
I mean, we're celebrating back here with our simulcast in the office here at 731 Lexington. Again, thanks to all of our team for helping. Mike Pyle, we're also celebrating mergers and acquisitions. The combinations of Berkshire Hathaway, the combinations of Analog's devices, can they be supportive for equity markets?
So I think on balance, we're less focused on the M&A story, which I agree with you does have some legs. But I think in particular, when we look at the U.S. market, we like two things. We like credit over equities. We see the policies that are in place, especially from the Fed looking ahead, continuing to be a really strong and resilient source of credit support. And we continue to like the up in quality equity market plays, tech, pharma, those up in quality names with strong business models and financial metrics. We think those are the types of themes that are going to continue to be rewarded in the U.S., even as we see those increased headwinds for the equity market overall.
Mike, people agree with you with respect to credit, and we see money piling into at least investment-grade U.S. corporate debt, and yet the Fed is actually paring back some of its purchases of corporate debt. Their balance sheet has actually shrunk, and we're heading into a slew of expected bankruptcies. Why go long credit now?
So I would say, we continue to see the Fed's backstops as extraordinarily credible on the credit market side. I think one of the things that's been striking is just, how little to date the Fed has had to do, to your point. But because of the credibility and the size of those backstops, which we see as ongoing, we think that the market's going to be able to continue to digest that issuance. And moreover, when we look at perhaps some of the choppiness moving ahead around the economic restart because of some of the challenges we're seeing on the public health side, we just think that backstop is going to be very resilient, even in the face of more challenging fundamental circumstances.
Mike, I wonder where that leaves your view on U.S. tech right now. More upgrades this morning. Cameron out, upgrading its price target on Amazon to a street high 3,700. Big tech reporting over the next couple of weeks. What's the view on that now for BlackRock?
Yeah, so we're overweight quality exposures on a global basis, including in the United States. So though we're cautious on the U.S. equity market overall, the parts of the equity market that are closer to the real economy and the real economy challenges, closer to some of these risks we see on the fiscal side, up in quality exposures around tech continue to us to appear resilient, kind of regardless of the state of the world we see moving ahead. So we like that part.
Mike, this is a US-centric conversation. As the week grows older, the focus will be a whole lot more on Europe and the continent going into the weekend. Upgrading your view on that, Mike, it's a change for BlackRock. Caught up with Rick Reeder of BlackRock, your friend and colleague, I'm sure, over the last few months, and he's changed his view on Europe as well. What's behind that, Mike?
Well, I think we're seeing two big things at work. I would say one is the really strong public health response we're seeing across the continent, allowing a much stronger restart of economic activity. We think that those fundamentals matter and are going to matter and flow through to both economic data and financial markets. And secondly, we do have increased confidence in the overall policy framework there. Obviously, we're going to get some news later this week around the EU summit and how they land the $750 billion rescue package. We think that's going to largely stay as it's been proposed. But looking at national fiscal authority, some steps forward from the ECB, both of those pieces are coming together in ways that look to us pretty constructive.
I look at this, folks, and Mike Pyle joining us from BlackRock. We welcome all of you on Bloomberg Radio and Bloomberg Television this morning. Mike, something I'm really unclear on is healthcare ballooned like the tech stocks, or is healthcare behind?
So I would say, we sort of see healthcare particularly the pharma space in the U.S. as having, and in Europe, as having some legs behind it. Those are really sort of strong business models. I think in this moment, there's a lot of focus on what that part of the healthcare world is bringing to society, bringing to the market, and I think that's a space where we see, quite a bit of upside alongside tech.
Mike, you talked about how in Europe they've got the virus.
Long position open on Japanese yen at 107.061. So new long position open on Japanese yen against United States dollar at 107.061.
Not that, two market levels right now in the United States. I mean, is it the election? Is it something else that perhaps people aren't factoring in enough?
So I think it's kind of all of the above. So I think you point correctly to an ongoing set of challenges on the public health side. We think that's going to weigh on the restart, ultimately weigh on some of the parts of the U.S. economy and the U.S. financial markets that aren't as tech-centric or pharma-tech-centric as what we've been describing. I think we see a set of fiscal policy risks both later this month as well as between now and the end of the year, potentially posing some risks around retrenching policy support on the fiscal side too soon. And then I think when we look ahead to the election, I think there's just a good degree of uncertainty both in the lead up to the election itself, what could be a very volatile environment, as well as on the backside of that, a highly divergent set of policy platforms that the voters are going to be choosing from and the investors are going to have to confront when we look past November.
Mike, overwhelmingly the consensus view is the Democratic sweep would be negative for this market. Is that your take?
So I think it's more complicated than that. I mean, I think on one side, it is clearly right that investors are focused on a set of potential changes on corporate taxes, a significant repeal of what the Trump administration and Congress passed in 2017. That will certainly have some flow through the bottom line. But I think the flip side of that coin is, I think relative to other outcomes, it's probably a more constructive one for ongoing fiscal stimulus through the coronavirus shock, much more positive around maybe getting something done on infrastructure and R&D investment, probably more positive in terms of a greater sort of stability and predictability to U.S.-China relations, immigration policy, what have you. So I think what we're saying is, the bottom line risks that investors are focused on are real, but they're potentially a set of top-line opportunities that make this a much more balanced picture.
Mike, it's a conversation you and I will continue with the rest of the team sometime soon. Mike Powell there of BlackRock. Tom Keene, it's been amazing to watch this consensus emerge that the risk is here in the United States and the constructive view, the hope, is over in Europe. That hope's going to be put to the test a little bit later this week, Tom, when these European leaders get together. We need to see some real, firm progress through the weekend.
We have said this before and been wrong. Again, our conversations in previous hours really center on how the Netherlands will respond. John, what I would focus on now as you do a data check is futures exploding. We've gone from up 14 to up 22 now on SPX futures. That's a 3,200 level on the Standard & Poor's 500.
Tom, I know you're excited to be back, but I don't know if 0.7% higher on the S&P 500 as futures exploding, but let's go there.
Do you know what's great, John? Is the distance between you and me and our quarantined and socially distanced is the length of Sun's goal for Tottenham against Arsenal this weekend.
Oh, been watching the football this weekend,
That was
Tom.
the measurement.
I'm happy that we've got all this distance and we've got the Perspex glass between us as well. Did you notice that management put Lisa and I closer together and you way in the distance?
I am such a fossil and so high risk that they have put me, folks. I'm hermetically sealed in a room here. Megan pulled the short straw, and she's my floor manager this morning. She'll be quarantined for the next year.
Alongside Tom Keene, together with Lisa Abramowitz, I'm Jonathan Ferro, getting you up to speed on a price action this Monday morning. From New York City, good morning. Coming up next on this program, Binky Chada, Deutsche Bank Global Chief Strategist. From New York, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, John, Lisa, thank you very much. A devastating wave of new COVID-19 cases over the weekend, including Florida, with a record 15,000 cases in a single day on Sunday. Doctors are now warning that ICU units across the country are near or at capacity. As for reopening schools in the U.S., Superintendent of Miami-Dade County Public Schools, Alberto Cavallo, tells NBC's Meet the Press they're working on what to do this fall, including deciding about sports programs.
We're going to obviously do our very best in our community, considering where the health data currently is.
NBC's Meet the Press can be heard Sundays on Bloomberg. Infectious disease expert Dr. Anne Rimon of UCLA says that one of the only ways to gain control of the virus spread in many of these areas is to reverse the course for some areas reopening.
We have to really double down on our efforts right now. We need to be closing bars. We need to be closing restaurants. We need to be going as far back into the early phases of lockdown as we possibly can to be able to get our arms around this.
Mexican officials say the number of confirmed COVID-19 deaths has passed 35,000, making it the country with the fourth highest total. Mars is about to be invaded by planet Earth. The U.S., China, and the United Emirates are sending spacecraft to Mars in quick succession beginning this week. It's the most sweeping effort yet to seek signs of ancient microscopic life at Mars. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
I've always wanted to learn another language, but every time I try, it never sticks. So I decided to give Babbel a try, and I really like the teaching method of the app. I started with the beginner lesson on Babbel, and it starts with simple words and phrases, and soon you're putting those words into a conversation. Each lesson takes about 10 to 15 minutes, and they're all really different, which keeps things interesting. The app is really smart. It actually keeps track of the words I'm struggling with so I can practice them and get better. I chose Babbel because it was created by real language teachers. They built it around real life, how people actually communicate, and what they care about. I can't wait to use my new language skills in the real world. Dos cervezas, por favor.
With Babbel, get conversational in Spanish, French, German, and more. It just takes 10 to 15 minutes a day. Now try Babbel free. Just go to Babbel.com and start learning a new language today. That's Babbel.com, Babbel.com. Influential conversations from Bloomberg Television.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable! Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rocked that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on. You earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
When you're facing a problem, like how to make an electric car more efficient, you could sit down and talk it through. But at Honda, we decided to listen to the wind tunnel. With wing mirrors or without? With? Without? With? Without? Or with cameras instead of wing mirrors? The new Honda E with wing cameras, not mirrors, because we listen to the wind. Honda, the power of dreams.
There's nothing in the data that suggests that kids being in school is in any way dangerous. Parents are expecting that this fall their kids are going to have a full-time experience with their learning, and we need to follow through on that promise.
Education Secretary Betsy DeVos taking some heat over the weekend, appearing there on Fox News. From New York City this morning, good morning to you all. Alongside Tom Keene, together with Lisa Bramwitz, I'm Jonathan Ferro, getting you prepared for the opening bell this Monday morning. Good morning to you all. Equity futures advance on the S&P 500, up around about 0.2%, up 0.7% after 2 straight weeks of gains on the S&P 500. We add a little bit more weight to that rally this Monday morning. And foreign exchange, the euro, stronger. Euro dollar up to 113.34, positive 0.3%. ECB decision this coming Thursday, Tom Keene. Then into the weekend, European leaders getting together to try and broker some kind of deal on where the money should go and who's going to pay for it.
Yeah, it's going to be interesting to see. Wolfgang Monschau was extremely smart on that with a nice essay in the FT this weekend as well. Right now, there are 8 things to talk to Kevin Cirilli about, our chief Washington correspondent. I know John is really focused, Kevin, on the stimulus timing, when we're going to see it. But I've got to go back to what we just heard from the Secretary of Education. It's been 122 days, Kevin, since I've been in the office. In 122 days, I haven't heard a comment from any government official more off the mark. I guess we've got some technical issues with Kevin right now. John Farrell, let's pick right up on this. The Secretary of Education there talking about everybody wants to go back to school. That's the most off-kilter comment I have heard in 122 days. In all my contacts, John Farrell, nobody buys that.
Well, Tom, I think what we can say, where there's huge agreement, is that if we can't go back to school, we can't get anywhere near to normalising this economy. There are so many people that just cannot go back to work. And that's the focus of this administration, Tom, trying to normalise. The problem is that they opened up too quickly across many states, across the Sun Belt, and we're experiencing the downside of opening up too quickly, Tom.
Yeah, no question about it. Lisa, you and I are living this. I mean, there's no other way to put it. And Lisa, without exception, college, high school, mid-school, nursery school, there's a profound impact here that the secretary just seems to be completely removed from.
My 11-year-old says to me pretty much every morning, do you think it'll be the normal in a year, maybe in 2 years? And this is a question that a lot of people are asking, and President Trump is saying it will be in the fall. Kevin Cirilli joining us now. I think we've worked out those technical issues. Kevin, can you talk about any pushback, if there is any, about reopening the schools and doing it too quickly at a time when President Trump would like to see things get back to normal as soon as possible?
Lisa, this is the crucial debate. And quite frankly, Republicans want to have this debate, especially as they're staring down another fight of economic stimulus, because higher education, private schools, public schools are all going to be at the negotiating table for this next round of economic stimulus. And quite frankly, Republicans are saying that they want to be on the side of reopening schools, even if there's a lot of uncertainty surrounding that. Democrats are saying that if that's going to be the case, then they're going to need more money in order to make sure that the classrooms are safer. Either way, this is a debate. I can't stress this enough, that Republicans looking at polling, looking at independent polls in swing states feel is going to help them.
Kevin, I mean, it's all political, and I get the idea that teachers' unions and Republicans and that. Is it really that simple? Is this really just about election positioning?
You know, I think that there obviously is the influence of data, particularly as it relates to if there's going to be an uptick come the fall. You're seeing universities across the country make different decisions as it relates to sporting leagues, but also whether or not students should be able to be coming back on campus. You know, anecdotally speaking, some private schools are suggesting that several days a week there might be online learning, and and really forcing parents to make a choice. But the bottom line here is that this has really illustrated all of the inequity, really, in the education system, and it's just one more microcosm of that.
Kevin, the president taking a new path, seen in a mask over the weekend, and I'm not going to get snarky about this. I think there's been a real shift in the rhetoric from this administration over the last several weeks. The why? You see it in the polls, don't you? There was one poll over the weekend where Democratic nominee Joe Biden led the president of the United States by 5 points. Where? In Texas. How worried is this administration?
Well, look, for the administration, they feel that they need to make this President Trump versus former Vice President Biden. And right now, it's Trump versus coronavirus. That's good for the Democrats, bad for Republicans. For the Republicans to get back on offense, based upon the conversations that I've had, Jonathan, with Republican and Democratic strategists, it's going to have to...
Hi, Arthur. How are you doing?
Well, for his standpoint, he's going to be continuing to tout his economic plan that he had put forth. He's going to also be engaging in a series of small discussions with the small business leaders. But the focus for him has been, from a strategic standpoint, to continue to make the focus about Trump.
In the meantime, health very much in the front and center. Anthony Fauci, the top infectious disease specialist, has been increasingly sidelined. Who's taking his place to lead the charge against COVID-19?
Well, Dr. Fauci has been largely politicized by both Republicans and Democrats, and you had the former vice president saying that he would have Dr. Fauci continue to serve in his administration if he were to become president. Meanwhile, last week I interviewed Dr. Deborah Birx, as she, of course, is another top official in the administration who is really working behind the scenes on issues like education and like other and reopening schools as well. But at the end of the day, I think that it's been this reliance upon the private sector in terms of some cases for economic data as it relates to whether or not businesses can reopen, Lisa. But from an education standpoint, this is a very, to say it's volatile is an understatement, because there's so many different the education system here in America has been so politicized with public versus private, charter schools and whatnot. And that's really what's being pushed and coming to a boiling point right now.
Kevin Cirilli, always great to catch up with you, sir. Bloomberg chief, Washington correspondent. Tom Keene, pretty much everything is politicized. You expect it to be, but maybe one area that should never have been politicized, the use of masks. I cannot believe how badly that was messed up in this country. And let me be clear about this. It was not just the administration. It was not just the other side of the aisle. It was health officials as well, several months ago, telling people not to wear masks because they wanted to build up stockpiles. Fair. Is there any reason why people should be wondering why there is so much confusion still about the use of masks?
Isn't there confusion in the United Kingdom as well? I believe I saw on the Telegraph, Boris Johnson wants masks in the stores, and they're going to wait, what, John, 1 or 2 weeks to do that?
Maybe so, Tom. You have to wear them on public transport, and they still haven't got this addressed. It is just ridiculous that it is July, the middle of July, Tom. This has been going on for months, and we're finally getting some kind of movement at the government level in both the UK and the United States on an issue that should have been addressed months ago.
No, there's no question about it. And you go to the interviews that we've had, including with Stephen Riley of Imperial College, the urgency of the experts, John, is ever greater.
Futures positive this morning, Tom, up 22 on the S&P. We advanced 0.7%. Up next on this program, Binky Chada, Deutsche Bank chief global strategist, on this equity market as earnings season begins in the United States of America and worldwide. From New York City, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
Is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today, there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up-to-date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
This is a Bloomberg Money Minute.
Decisions, decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Monday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Untitled Chapter is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Untitled Chapter, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Untitled Chapter, a safer way to France and beyond.
Ever wondered how people's postcode lottery works? Easy. Your postcode is your ticket. And every weekday it gives you the chance to win £1,000 or £30,000 every weekend. And every month players in your postcode could win a share of £3 million. Join in at postcodelottery.co.uk/radio before midnight on the 23rd of July to play in the August draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
And action.
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene, together with Lisa Bravitz. I'm Jonathan Ferro. 2 hours away from the opening bell this Monday morning. Your price action shaping up as follows. After a rally to close out last week, 2 weeks of gains, and we add some weight to it this Monday morning, up 0.7% on the S&P 500. Looking out through the rest of this week, coming up tomorrow, CPI in America, Thursday, retail sales and jobless claims as well. Ahead of all of that, the euro advancing into an ECB meeting this Thursday. Euro dollar 113.32. Treasuries really muted price action this morning, Tom Keene. Your yield 0.65%. Yields unchanged.
Now in the equity market, an exceptionally important interview, a conversation with Bikram Chadha of Deutsche Bank. His notes are absolutely definitive on the details of the equity market, the correlations, and particularly what flows of money are doing. Binky Chadha, thrilled to have you with us. I read and reread your paragraph on something I lecture about, which is positioning is everything. Tell me the positioning or lack thereof of this bull market run.
So what I would say, Tom, is that, the story of basically the huge bounce that we've had since March the 23rd in the S&P 500 is really, a positioning story. So what we had is a very, very unusual shock in the sense that, it reached us all basically in terms of the news at the same time. So you have a very synchronized negative impact. The market, as you know, at the time was, max overweight across basically every spectrum of equity investors. And so we all got the news at the same time, clearly very negative shock. So everyone went basically max negative. And since then, it's been largely basically a story of what I would call, a really classic short squeeze. I think the actors relative to, the historical textbook that you may have been lecturing about is a little bit different. I think systematic strategies are much more important. And so, if we fast forward the tape basically to this week as earnings begin, I would basically say, the squeeze is basically on again.
Right.
I think that there is a fundamental catalyst for that, and that is, we think earnings are basically set up to beat. And I can talk about that, but in the context of underweight positioning, especially in the cyclicals, as we go to reporting the banks, squeeze is basically continuing.
How has your world changed by such substantial negative real rates? How does your equity world change given what fixed income is giving you?
I would say that low rates, especially negative rates, are really bad in terms of, made life very, very difficult for active equity fund managers. And that is because, rates are clearly a factor. I mean, if you think about equities, you can take sector, you can take the market, you can sort of line them up on one side as bond-like and at the other end as most equity-like. So rates matter. And when rates are far away relative to sort of, the economic recovery or the cycle, that is basically going to cause some major issues and, has basically caused major issues. So I would argue low rates are negative for the cyclical trade, is the bottom line. And so we really do need rates to start going up to have the cyclicals perform. And, as and when the recovery happens, you would expect the cyclicals to perform. But if rates don't go up or are artificially compressed, that's not going to be very easy.
I want to be clear, Binky, then, about your view, this idea that positioning favors U.S. equities to go higher. And yet, unless real yields go up, it's not going to be favorable for cyclicals. Are you saying that the technicals are favorable for big tech right now, even though I'm not sure who's shorting them? I mean, is somebody actually out there aggressively shorting Amazon and Apple and Facebook right now?
No, I wouldn't say that. What I would basically say is that, I was speaking about positioning basically at the S&P 500 at the index level. One of the things that we emphasize is that there's really been sort of a tale of two equity markets. We have the mega cap growth stocks on the one side, the 10 stocks, and they basically, fell by less and have basically been trending up, and they are well basically now above where we were at the peak prior to the breakout of the pandemic. Everybody else is, way lower. So positioning at the index level, I would differentiate from, within the equity market. I would argue, basically that where everybody is underweight is everywhere else. And, our call is basically that, it's nothing wrong with the mega cap growth stocks and tech. We just argue that it's basically run very far, but they do grow much faster. So you don't really want to be underweight. You want to be neutral, but you really want to overweight the cyclicals. I would argue, tactically, especially for the next 2 to 3 weeks, absolutely. I would argue earnings, especially for the cyclicals, are set up for a beat. If you take a look at the bottom-up consensus, we all know fell massively as the shock hit in March and April. But basically by mid-May, the bottom-up consensus had stopped falling, so the downgrades had stopped. And history would tell you that basically once downgrades stop, depending on what happens to the macro data, you're going to get upgrades or downgrades. Yeah. And what we got basically is massive positive surprises on the macro data, but we also got, and so the consensus would have started to move up basically with a lag, but what we also got is the resurgence of the virus. So those upgrades basically never happened. And if you think about the resurgence of the virus in terms of the timing, it was really later, and the economic impact was later. When you look at our, macro activity pulse index, so when you look at at Citigroup's CZ, you will see that the data surprises have basically gone to a place they've never been before. I mean, they're running at twice any kind of prior peak, and that should have basically seen upgrades. We didn't get those. So there's a lot of moving parts, but on net, I would basically say that, the earnings season is likely to beat. Positioning, especially in the cyclicals, is very low, and the combination of those, explains why the cyclicals and the financials were doing very well on Friday, and why the pressure on the market is basically to move up. But there is still a fair number of, unknowns, and so it should be, I'm not saying it's clear and straightforward, but it never is. The bias is still up.
Let's build on that, shall we? The allocation to cyclicals. I've had many people come on this program, and others as well, say you want to maintain that allocation to US growth, but if you want to take cyclical risk, take a levered play and take that play through Europe. What's your response to that, Binky?
It's very simple and very short. It's absolutely, I would be overweight Europe, I would be overweight Japan, and that's really the same call as basically being overweight the cyclicals in the U.S. If you take the U.S. equity market and divide it into the mega cap growth stocks and everybody else, I'll just call them XMCG if you want, you basically see that they bounced from the bottom, but they've essentially gone sideways, for the last few months. If you then overlay the other regional equity markets, you'll see that they're all clustered basically around XMCG. So I think for the U.S., it's very important to divide up the two in terms of thinking about sector or stock calls. If the growth happens, and clearly it's not going to happen in a straight line, but we've had a pretty big bounce, and what I'm saying is in the data so far, and what I'm saying is that that's just really not priced in.
Binky, I'm struggling to find people who aren't overweight Europe right now. How vulnerable is that call, at least from your perspective, on a fiscal hiccup this coming weekend?
I think, relatively modestly so. I think if you look at European performance and relative to the U.S., and especially if you do it, ex-MCG, you're going to see that, the two are basically moving together. And Europe actually, exhibits a sort of more resilience. And on the policy front, I think
I'm placing stop on profit for my Japanese yen position that I opened at 107.061. So stop on profit at 107.081. It will give me £200 in profit. So, as I said, stop on profit at 107.081.
Catch up with this Binky Chana there of Deutsche Bank. Tom, I'm conditioned by the experience of the last 10 years and conditioned to be negative. I hope I'm proven wrong. But Europe has gotten together so many times, and again, it's come out the other side with a suboptimal, mediocre agreement.
John, explain the Netherlands here. I think our audience, particularly in America, doesn't understand the nuance of the Netherlands between the United Kingdom and particularly the Netherlands' relationship with Germany. There's a real tension there, isn't there?
Well, I think core Europe is often described as just Germany, but it's more than just Germany. It includes the Netherlands, it includes Austria and others as well. The Frugal Four, as Lisa mentioned at the top of the hour. Tom, the issue for me is that there has got to be some kind of fiscal transfer. They can't be loans, they need to be grants. And if there's not an agreement on that, if there's not any kind of formalized mechanism that we can get some unanimity around, then I think we're in store for a huge upset coming out of the weekend, Tom. We need to see some progress. And for many people, it's not about the size of the agreement. It's about the mechanism they agree to. Because if you can get that mechanism for fiscal transfer, if you can achieve that, Tom, then over time, people will believe that sets the stage to do a whole lot more down the road.
But the immediacy here, and folks, we haven't touched on this yet with all the other issues going on in including futures up 23, is in the United States. It's July 13, 14, and there's a new urgency, John, to get the fiscal action done here truly by the end of the month.
Well, I think we can achieve that, Tom, because we know in America there is appetite to do something on the fiscal front collectively. Where there is a huge difference in the United States for me is the composition of that package. And Lisa, we've gone back and forth on this. There seems to be a loss of appetite from the administration to offset the shocks to income, with checks to Americans, with enhanced unemployment benefits expiring at the end of the month. And most people would assume with unemployment where it is, which is simply not good enough still, and where it's said to be year-end, still close to double figures, these are things you still need to do. And what we've seen again and again and again coming out of a crisis, when the immediate crisis ends, the collective will fades. And unfortunately, what we've seen over the last several weeks is evidence of that.
One big question baked into the markets, in my opinion, and Mike Pyle touched on this, is what would be the consequence in markets if Congress did not re-up the enhanced unemployment benefits as they expire, John, at the end of this month?
Well, I hope they're not expiring. I hope they are tapered somewhat to account for some of the difficulties that still remain in this economy. Coming up in the next hour, look out for a conversation with Lee Ferrich, State Street Bank Head of Macro Strategy, joining us on this program at the top of the hour as earnings season gets underway in the United States of America. From New York, the city, this morning. Good morning to you all. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, Lisa, John, thank you very much. The Florida Department of Health has reported at least 15,000 new COVID-19 cases, the highest number of new cases in a single day by any state since the coronavirus pandemic began. Infectious disease expert Dr. Anne Ramon of UCLA says scientists are still learning about the virus's potential long-term effects.
There is potential for long-standing injury from this virus. You know, there's potential for cardiovascular injury, potential for neurologic injury, for pulmonary injury. We are just really beginning to understand these kinds of sequelae.
Mexican officials say the number of confirmed COVID-19 deaths has passed 35,000. Only the U.S., Brazil, and Britain have more confirmed deaths from the new coronavirus. President Andrés Manuel López Obrador insisted the development of the pandemic is positive because of Mexico's 32 states. Only 9 had an increase in infections. In California, firefighters and sailors continue to try to contain a fire on board the USS Bonhomme Richard following an explosion at the naval base San Diego Sunday.
Sailors across this waterfront are absolutely doing a magnificent job to save the USS Bonhomme Richard. They're fighting their ship and they're saving their ship.
Rear Admiral Philip Sobek. About 21 people were injured. Officials say the fire could burn for several days. China says it will ban entry to U.S. Senators Marco Rubio and Ted Cruz, representatives, over their criticism of the ruling Communist Party's policies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. With a Bloomberg Business of Sports report, I'm Michael Barr. FedEx has reportedly notified the Washington Redskins that it will remove its signage from the stadium if the team does not change its name. The shipping giant signed a $205 million stadium naming rights deal with the Redskins in 1999. According to the Washington Post, FedEx notified the team in a July 2nd private letter it will remove its name after the NFL's 2020 season. Former New York Yankees star Alex Rodriguez and actress Jennifer Lopez are behind a group that has offered about $1.7 billion to buy the New York Mets. That's according to the New York Post, which reports Mets chief operating officer Jeff Wilpon would prefer to sell the team to the Rodriguez Group if their offer is close to the best bid at the end of the auction. Billionaire hedge fund titan Steve Cohen has also made an offer. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Decisions, decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Monday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Times Radio, an exciting new national speech station, is here.
Featuring live news,
analysis, conversation,
and the unequivocal world-beating journalism of The Times.
Join Asma Mir and me, Stig Abel.
I'm John Pienaar. Join me on Times Radio.
Join me, Mariella Frostrup.
I'm Giles Corrin.
Hello, I'm Kathy Newman.
This is Michael Portillo.
Join me, Carol Walker.
I'm Hugo Rifkind.
Times Radio is here. Search Times Radio on TuneIn to listen.
More retail participation is very important. It broadens the marketplace, and importantly, it means society buys into a market-based system even more. However, you don't want retail to be the victim of a head fake.
Have we become a victim of a head fake already? That was Mohammed Al-Arian there of Bloomberg Opinion, a chief economic advisor to Allianz from New York City this morning. Good morning to you all. Alongside Tom Keene, together with Lisa Abravitz, I'm Jonathan Ferro, live on Bloomberg TV and on Bloomberg Radio. And your equity market closing out last week for a second straight week of gains on the S&P 500 and adding some weight to that rally this Monday morning. Back through 3,200, up 22 points on the S&P and positive 0.7%. There is your euro strength, a story that many people are starting to line up behind. Euro dollar right now 113.31 and Treasury stable. Muted price action through the morning so far, Tom Keene. 0.65% is your yield on a US 10-year.
Oh, very good, John. And then let's bring it right over to where we are in earnings this week. And I want to go granular here and go into my vast knowledge of the German language. This from Credit Suisse this morning. The importance and thus the number of branches will therefore continue to decline. Measuring the branches in America, Shonali Basak of Bloomberg News. Shonali, to me, this is incredibly important. The idea of the layoffs and jobs to come. How much of this is because the pandemic has taught us it's a digital banking future?
Well, we knew that before, and we certainly know that now in full force. We had that great scoop last week about Wells Fargo cutting jobs. They kept their headcount quite high relative to the other banks. So to see them now cut just is facing reality, but it's also bracing for a future where they might not be able to earn as much in revenue with interest rates as low as they are.
Shonali, consumers are often reluctant to make the change. This has forced them to change, pushed many people towards digital banking, and I wonder if that accelerates the cuts elsewhere that Tom describes.
We're not going to see the cuts in full force this year. Remember, the banks came into this year thinking they would be the good guys. So for them to sit there and cut jobs in full force right now won't look good to their employees. It won't look good to the regulators. And so they'll be pretty hesitant to make sweeping cuts. But next year, they may be forced to reckon with that if their net income situation is this severe.
All right, well, we're going to get a read on the net income situation for the big U.S. banks, starting with JP Morgan, Wells Fargo, and Citigroup, all reporting tomorrow, kicking off the week of earnings from the big banks. My understanding is people are expecting very strong results on the trading revenues, the FICC trading revenues in particular. Investment banking revenues will be bolstered by some of the government programs, PPP, et cetera. And then on the net interest margin, as well as loan losses, that will be a point of pain. Tell us what people are expecting for the week ahead.
A lot lot of those loan losses in the first quarter, Lisa, had come from the credit card businesses. But let me tell you something else. 8% of all U.S. mortgages are either past due or delinquent. And so we're going to want to see how those mortgages really play into the weakness in these banks that we didn't see in the quarter prior. And consumer spending might also be tumbling, which will impact these very big banks.
I mean, Shonali, this is great, but let me cut to the chase. It could be Mr. Moynihan, Mr. Corbett, whoever. Let's start with Mr. Diamond. Yeah. What is Jamie Dimon actually going to do on a conference call to signal the view forward?
So far, he's been pretty positive. He believes that it would get better toward the end of the year. That was a view from about a month ago. Let's see if he keeps up that.
Hello, Bartek. How are you? You all right?
The next stimulus will be far less money, and it may not be checks into the pockets of many Americans. So that will all affect his income moving forward. And the idea that, you know, at Bank of America, 30% of small businesses were in deferral. What does that look like at JP Morgan, which also is banking a lot of small businesses?
Shonali, deferral is different to a loan loss, and I wonder how much clarity we'll get on that over the next several days, whether these stories are improving as the reopening has commenced.
Yes, that's a great question, John. S&P actually thinks a third of all of these deferrals will turn into delinquencies. So that's significant. What does that equate to? $128 billion worth of loan losses across the industry. That is significant. We only saw $9 billion at JP Morgan in provisions in the first quarter. Again, we expect the second quarter to be bigger. But S&P now, which is doing the downgrades, believes that this will mount significantly through the end of the year and into next year.
Shonali, it's fascinating to me that we're probably going to see the loan losses be the biggest pain for Wells Fargo, JP Morgan, and Bank of America, some of the biggest lenders. And then you've got the Goldman Sachs and Morgan Stanley that are going to perhaps benefit more just purely by the construction of their businesses from the boom in investment banking and FICC and equity trading. Is that what people are expecting? Much better results from Goldman Sachs and Morgan Stanley than the other large U.S. banks?
Listen, JP Morgan is still a big investment bank, and it's the biggest FICC business on Wall Street. What is the expectation? About $700 million more in fixed income trading. That's compared with about $800 million less in net interest income. And so it doesn't pair off as perfectly as you would think, even when they're hitting these major, major highs. There's also a question for Goldman, even with that fixed income trading, with them so close to their stress capital buffer, what is their capital return story going to be to shareholders in the coming months?
So what's the Goldman story this time around? I mean, I've really lost this, Shonali. I've got my eye off the Goldman Sachs ball here. What does Mr. Solomon need to do this earnings season?
So their consumer business has been benefiting from what you guys were talking about at the beginning, that digital banking model. They have the benefit of starting from the ground up. But this is such a small part of their business still.
It's like it's not existent, isn't it?
Exactly. And so they made these long-term plans. Can they hold those plans steady as they start to change their bank?
Hey, Shonali.
Question.
Great to catch up with you as always. Shonali Basak there, Bloomberg Wall Street correspondent, will be with us through the week as the big banks report here in the United States. Tom, already getting a sense of this, that this, of course, is a relative game of expectations going into earnings season. Vicky Chandra of Deutsche Bank touched on this, that for the financials, the bar is so much lower going into earnings season than, say, big tech, which is why some people think the risk is skewed asymmetrically towards the financials and the more cyclical areas of this market, beating expectations. And big tech, Tom, the bar is so high and the rally has been so big into earnings season. It's a big one to hurdle.
And you see it, of course, with Bassinet at Citigroup and Blackledge at Cowen upping their price targets on Amazon, just as one example. John, I'll buy that theme, but the answer is tech got it where it got by outperforming. So, you know, I wouldn't bet against it. But, John, it really doesn't matter because I'm in the triple leveraged all-cash fund. And, you know, I may, buy the Keefe Bruyette Bank Index, just nibble a
just
little
nibble?
bit.
You're going to come out of cash.
No, I didn't say that. I'm thinking about it.
Just nibble. That's the technical term.
I'm looking for an entry point.
Lisa's worried. Lisa's just sitting here worried.
That's a top. You're going to nibble. That means it's all over. I will say, though, when it comes to banks, when you talk about pessimism, the KBW Bank Index, just to give you the sense, John, it is down 34% year to date. So just to give you a sense of the dramatic underperformance, that is not a very high expectation. They are treated like utilities. Now, the question is, can they prove that they are more than that going forward, John?
Not unique to America either. Tom mentioned Credit Suisse a little bit earlier this morning. Stock's still down around about 20-something% year to date so far. It's been painful. Guys, counting it down to the opening bell, we are positive, up 0.7% on the S&P 500. We advance by around about 22 points on the S&P, building on the rally of the last couple of weeks. We've seen the narrow breadth. Will it start to broaden out a little bit more? From New York, alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro. This is Bloomberg Surveillance.
Times Radio, an exciting new national speech station, is here.
Featuring live news,
analysis, conversation,
and the unequivocal world-beating journalism of The Times.
Join Asma Mir and me, Stig Abel.
I'm John Pienaar. Join me on Times Radio.
Join me, Mariella Frostrup.
I'm Giles Corrin.
Hello, I'm Kathy Newman.
This is Michael Portillo.
Join me, Carol Walker.
I'm Hugo Rifkind.
Times Radio is here. Search Times Radio on TuneIn to listen.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Outdoor activities, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Avoid shared surfaces like swings or benches. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn. How do hockey fans know what day it is? Just turn on the Locked on NHL podcast, where a rotating cast of hockey experts guide you through the week with a different theme show for every day. From big news Monday to recap Friday.
But we've got a couple of news items that are noteworthy in the NHL in the last week, one of which is below the NHL, and we'll bring that up first. So the AHL announced officially, this has been speculated for weeks and weeks, but the AHL...
Search Locked on NHL on TuneIn to listen.
This is Mike Golick from ESPN's Golick and Wingo. Every morning, Trey Wingo, my son, and I sit down to discuss all the news, drama, and highlights spinning the sports world that day. And with TuneIn, you can hear us whenever and wherever you go. Just search Golick and Wingo to start listening today.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the
Search PFF NFL on TuneIn to listen.
Stay close to college hoops conversation with the College Basketball Talk podcast from NBC Sports. Join Rob Doster and Bobby Reagan for weekly recaps of what's happening in every conference, nostalgic flashbacks to classic games, and big picture discussions on the future of the sport.
Yes, they found a way to ensure that there was a financial incentive for be able to get paid for K to go there, if that makes sense. But it's not, there was still a recruitment involved, right? Let me think about it like this.
Search College Basketball Talk on TuneIn to listen.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow at TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
Kill O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
Latest financial and business news anywhere. We've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok.
She joins us on the phone from the Hudson Valley.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
What does that moral leadership look like to you?
Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
Is we are likely facing a slower growth, a sluggish economy as we do recover out of this, and that is a great backdrop for secular growth.
A lot of businesses are not buying into the V, they see a different destination regardless of the journey.
People will have got the wrong impression from the data from May and June. What really happened is the economy sort of fell off a cliff, hit a trampoline and bounced.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa.
Good morning, everyone. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Television. Jonathan Farrow, Tom Keene, Lisa Bramwell. Thrilled that you're with us this morning. What you need to know on the Monday backdrop, futures not only up, but they advanced through the hour here. Futures up 22, Dow futures up 206 with a risk-on feel to the market. It's an exceptionally busy week, John Farrow. And what I find fascinating,
I am moving my stop on profit for Japanese yen to 107, 101. So stop on profit to 107, 101. It will give me £400 in profit. Okay.
Market, Tom, as increasingly we get guest after guest lining up behind a long Europe view. That's going to get a test this weekend.
And the part of the test is going to be the bank earnings. Just speaking with Sonali Basak about this. Lisa Bramowitz, I guess we have a flat yield curve. I guess we've got a completely odd bond market. How does that benefit the banks? The answer is we don't know.
Well, the answer is it does not, right? I mean, the flattened yield curve is negative for the banks because you borrow short, you lend long, you earn nothing for it if the yield curve is flat. On the other hand, the low rate regime has pushed corporations to borrow record amounts of money, and this has been a huge boon in investment banking fees for the big banks, which is one of the reasons why people are expecting such a hit there. I will say this, Tom. I looked at high-yield bond trading volumes recently for the year, and on average, they are significantly higher than the previous all-time high. So another point of strength for the banks will be in the FICC trading revenues.
Part of it worldwide, folks, is, of course, this continuing pandemic. And moments ago, someone who's really committed to Bloomberg surveillance put out a blistering tweet on the president. I want to read it to you off the screen. This is from the acclaimed Peter Hotez of Baylor, and it is the most scathing tweet I've seen in this pandemic. The president of the United States retweeted this nonsense. It says to me, one, he lacks interest in slowing or halting the virus. The strategy is continued deflecting, first China, then the World Health Organization, and now the scientists themselves. Mr. Hotez goes on to say of the president, we'll need to seek a branch of government still willing or able to lead a federal response. John, this is a backdrop to all we talk about in economics, finance, and investment.
Tom, let's be really clear about this. Every single aspect of government worldwide deserves to be criticised for their response to this crisis. The WHO said travel curbs didn't help. Are we saying the WHO is immune from criticism? They should not be. Mayor Bill de Blasio in this city in early March came out and said, get out on the town. That was what the mayor of New York City had to say to the people of New York. Get out on the town. He is worthy of criticism as well. The government, the federal government, is of course also worthy of criticism as well. And what is important here, Tom, is learning from mistakes and learning from them quickly. And what we need at the federal level was something a whole lot quicker, a whole lot earlier. And that was a coherent strategy on how we safely reopen these economies. And we pushed it too far, and we went too soon, and we went too quickly.
We'll continue to these interviews on Bloomberg Radio and Bloomberg Television through the week, particularly our commitment to the Johns Hopkins University. Right now, you need a briefing on this Monday on the state of the markets, and we do this with futures up 22, Dow futures up 195, a modest risk on feel. Lee Farage is the State Street head of macro strategy and, of course, decades of perspective. Lee Farage, why is this time different? If I want to participate in the equity markets, what's different now than every other crisis we've had, once-in-a-lifetime crisis?
I guess what's different now is the sheer size of this policy response. I mean, I think we've never seen zero rates across the world. We've never seen the level of QE that we're getting now. So in terms of monetary policy, that's the big difference this time. Previously you'd have seen a monetary policy response, but there would have still been, an interest rate on cash or some sort of interest rate on bonds. We're not getting anything here, okay? So, the TINA trade, there is no alternative, is the one that is clearly winning out now. Despite all the risks that you've sort of highlighted and talked about and we know are out there, that investors are just shrugging it off and saying, well, this thing keeps going up, I'm getting zero everywhere else, that's why I've got to be in it.
Lee, we've just witnessed the biggest fiscal policy experiment maybe in economic history. Is the verdict in yet? How successful has it been?
It depends on the follow-up. Because what the fiscal response we saw in the U.S. is dated. The $600 a month in extra unemployment insurance runs out on July 31st. Various other measures, the PPP loans start to get converted to grants, which means that people can be laid off, in the next few weeks. So, we are facing, a potential fiscal cliff in the U.S. I mean, the CARES Act was huge in terms of helping to mitigate the impact of the pandemic. I mean, compensation levels fell by $840 billion in April. But what we saw was that the government spending or government transfers went up by $3 trillion. $2.8 trillion of that was the CARES Act. So, we've seen consumers protected by these huge fiscal transfers, but they run out, and we still have a very high unemployment rate. We're not, because of the respread of the virus or the latest surge in the virus, we're sort of going backwards or pausing on the reopening. So there's still a lot of people going to still be out of work, and if they start to lose this benefit, then that's got to impact the economy in Q3.
I'm moving further my stop on profit for Japanese yen to 107.11.
But now when we go into Q3, it's like, okay, so where's the next impetus going to come from? Because, 20-odd states are pausing or rolling back the reopenings, and we've got this fiscal cliff. So, that's why Q3 is going to be so challenging. But I think, in Congress, they're probably looking at the data going, okay, we're over the worst, we're gradually reopening, we can pare back the fiscal stimulus, but I think that would be a huge mistake.
Lee, it seems like this is not unknown, and a lot of the administration has come out and said that they would like to see more stimulus, perhaps not an extension of the unemployment benefits as they are stated as such, yet there is push for this. What's your feeling in terms of what the downside risk is to stocks should they not extend the enhanced unemployment benefits?
It'll take a while to come through. I mean, as I said before, stocks can shrug off any sort of bad news. I mean, I've been completely surprised, given what we're seeing on the virus numbers and given what that's got to mean for reopenings and activity going forward, that stocks are still where they are. So, it's very hard to say that's going to hurt stocks by that amount. But at some point, this wall of negative news has to make investors think about the risk reward of these stocks, particularly at these sort of levels, particularly the stocks that are actually going up, because it's a very, very narrow rally. If you looked at an equally weighted S&P against the cap-weighted index that we always look at, the gap between the two in terms of year-on-year terms is about 12%. It's the widest since 1998. So this is a very, very concentrated rally in few stocks which have become very, very, very richly valued. So it's when that risk-reward tips over. Now, does the lack of a fiscal stimulus mean that risk-reward tips over? Maybe, and we get closer to the election, and that becomes more of an issue as well. So yeah. There are plenty of negatives out there, but so far the market keeps ignoring it. I mean, I'm certainly leaning on the bearish side, but it's hard in the face of the price action.
Well, Lee, this is what's amazing to me. You point to the fundamental economy, and it is negative as far as you can see. Once you withdraw stimulus, there is a lot of negativity out there, and yet what people point to that's supporting everything is not only the fiscal money, but the monetary policy, which not only has flooded the system with cash, but also has a promise of doing whatever it takes. Why are you willing to fight against that, to be bearish, given the fact that you have officials on all sides of the world doubling down on this pledge?
No, it's a very good point. I guess I'm sort of a bit old school in so much as I don't believe you can just create money out of nothing continuously without any pullback on that. And I think where the market looks at it, the best performing asset this year is and over the last couple of years, it's not stocks, it's gold. Gold is your hedge against this continuous increase in central bank balance sheets. Gold provides you that sort of hedge against the debasement of fiat currencies. So gold is actually outperforming stocks. So, we can talk about stocks doing well, but actually it's a very, very small subgroup, and there are other asset classes such as gold that are doing better. So yes, in the world we're in, overall stocks are going to go up, but at some point you've got to start questioning whether the authorities can continue to just keep printing, and keep supporting an underlying economy that, as you rightly say, would be collapsing without this support.
Lee, we don't need to see you. I can just imagine you right now, the exasperation of someone with a bearish stance on this market. Lee, great to catch up. Lee Ferridge of State Street. Lee, so let's think about it. Just reflect, just quickly. The post-COVID, the post-shutdown tides, June 5th, on high-yield credit. The post-shutdown steepness, the peak of the yield curve, June 5th also. A couple of days later, the equity market peaked as well. I think we have to acknowledge that this market has adjusted to the risks that have started to come back to the surface over the last month.
Certainly, if you look away from tech, you see that, right? I mean, it's big tech and then everybody else, which has actually seen declines recently. And even in high-yield debt, it's actually underperformed investment-grade credit. The question is whether we're going to get a wave of systematic bankruptcies that could perhaps shake this feeling that central bank cash will flood the market. But really, there is this feeling on the higher-level quality stuff, the Fed's got your back.
The fiscal component, absolutely massive this month as well. Coming up on this program, Lewis Alexander, Nomura chief U.S. economist. Coming up tomorrow, retail sales will come Thursday. CPI will come tomorrow. A lot of economic data this week as we count you down to an ECB decision and a meeting of the great European leaders. I'll take a deep breath too. Equity futures up 22 on the S&P, up 0.7% after a 2-week rally. We add a little bit of weight to it. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Thank you very much, Tom. Lisa, John, there are staggering new COVID-19 infection numbers from Florida with a record 15,300 cases on Sunday alone, surpassing California and New York. Their ICU units are quickly filling to the brim with patients, and officials are warning that they should be at capacity soon. Miami Mayor Francis Suarez says increased hospitalizations should also lead to a rise in their death toll.
We just crossed the threshold. I think we had 196 ventilators back then. We just went over 200 yesterday. And so that means that there's no doubt that the death rate will most likely go up over the next week or two. And so that's something that our residents should be expecting.
President Trump and Education Secretary Betsy DeVos are pushing all schools to fully reopen in the fall. DeVos stressed that message on CNN's State of the Union.
Kids need to be back in school, and that school leaders across the country need to be making plans to do just that. There's going to be the exception to the rule, but the rule should be that kids go back to school this fall. And where there are little flare-ups or hot spots, that can be dealt with on a school-by-school or a case-by-case basis.
Meanwhile, House Speaker Nancy Pelosi blasted the White House for their push, calling it appalling. A new poll shows Democratic nominee Joe Biden has taken a 5-point lead over President Trump among voters in Texas, following a surge in coronavirus cases. Dallas Morning News University of Texas at Tyler poll has Biden with 46% compared to 41% for Trump. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
I've always wanted to learn another language, but every time I try, it never sticks. So I decided to give Babbel a try, and I really like the teaching method of the app. I started with the beginner lesson on Babbel, and it starts with simple words and phrases, and soon you're putting those words into a conversation. Each lesson takes about 10 to 15 minutes, and they're all really different, which keeps things interesting. The app is really smart. It actually keeps track of the words I'm struggling with so I can practice them and get better. I chose Babbel because it was created by real language teachers. They built it around real life, how people actually communicate, and what they care about. I can't wait to use my new language skills in the real world. Dos cervezas, por favor.
With Babbel, get conversational in Spanish, French, German, and more. It just takes 10 to 15 minutes a day. Now try Babbel free. Just go to Babbel.com and start learning a new language today. That's Babbel.com, Babbel.com.
When your tenants have an overflowing block sink right in the middle of your busy day, superheroes crashing through the wall isn't going to help anyone. With Direct Line Landlord Emergency added to your policy, we're on it to send a rather super drainage engineer in 4 hours before you've even sat down to dinner. We can also assemble plumbers, locksmiths, glaziers, and electricians. Search Direct Line Landlord Emergency. We're on it. Direct Line. Residential properties. Optional add-on up to 1,500 per call-out. Extreme weather conditions may extend response time. Underwritten by UK Insurance Limited.
Millions of people in the UK struggle to put food on the table. That's why Asda's donated £23 million to FareShare and the Trussell Trust since 2018. Please help us do more by donating to our Fight Hunger trolleys in store. Asda. We're all in this together. FareShare and the Trussell Trust are registered charities. See asda.com/fight hunger.
Imagine winning 10 grand. Yes! With Set for Life, you can win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures and game-specific rules apply. Players must be 16 or over.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Monday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
You're going to see passage of a Phase 4 stimulus deal by the summer recess. And then thereafter, there's going to be wariness to bring on more debt. You cannot drive.
I'm keep moving up my stop on profit for Japanese yen, and I'm moving up to 107.161. It will give me £1,000 of profit if it will close below this position. Yep. So the stop on profit at 107.161.
Futures up 0.7%. Alongside Lisa Abramovich, together with Tom Keane, I'm Jonathan Ferro. And Tom Keane, that is where the focus is. The next steps from fiscal authorities.
No, there's no question about it. The fiscal authorities matter, but also the monetary update. As you know, John, there's important decisions this week. Bank of Japan. There's a webinar with Francine Lacroix that will go on with the governor of the Bank of England and the president of the New York Fed, and that's a good place to start with our Michael McKee and Economic Briefing, our international economics and policy correspondent. Michael McKee, very simple. John Williams will be with Francine Lacroix today, and he is the man of the R-Starred. Does any of this theory that you go out to Jackson Hole in a normal year and pontificate on, does any theory matter anymore like R-Starred?
Not really. We know our star is basically zero at this point. There's no growth and there's no potential growth to be measured at the moment. So the Fed, like all central banks, are basically stuck at zero for the foreseeable future, which means that even with the ECB, the Bank of Japan meeting this week, don't expect any monetary policy moves. Maybe something later in the year. But remember, they're all about interest rates. Interest rates are at zero. Not much more they can do. It is, as John was saying, the fiscal authorities who matter right now.
Michael, what's so important here is the idea of what will be the price for this, the free lunch idea. With all your years of experience, what's the price out for the foreseeable future that we're all going to pay?
Well, that's the hard thing to know. No, there was always a theory that people would change their spending habits because they would expect taxes would have to go up if there was a big budget deficit. So far, the change in spending habits is due to the virus, not due to potential for taxes in the future. And we don't know at what point we get any kind of crowding out, if we do, in the markets from all of the deficit spending that's being done in this country and others. So it's kind of a real-time experiment. A lot of people like to say, hey, it's MMT. It's not really, in the sense that we're not prepared to raise taxes to step in front of inflation as MMT would have you do. But it is a new world in which deficit spending has become the norm, and tremendous deficit spending, not just a little bit.
Mike, there is a question. We know that the Fed is going to remain on zero for the foreseeable future. Some question about negative rates, although right now the Feds are not interested in discussing it. They're not thinking about raising rates. There is a question how much Federal Reserve officials will backstop companies that are the closest to bankruptcy, perhaps that otherwise would go bankrupt had it not been for the pandemic, especially as there's growing concern about zombie companies and the halting of the creative destruction process in the United States that has been a hallmark of this nation.
Well, that's an interesting question because a lot of people are focused on this zombie company idea. The problem you have is measuring exactly who would be a zombie company and who might find traction otherwise. Now, the Fed, its lending programs for businesses have attracted less interest than people thought. The Main Street program and the larger company lending programs that the Treasury is administering, because they took so long to get set up. A lot of companies went to banks, and with interest rates so low, they managed to get either loans or be able to go into the bond market and refinance. And we'll have to see as the economy continues and if it starts to grow, whether some of those companies just give up the ghost. We have seen a lot of bankruptcies announced in the last couple of months. So it may be that the zombie company theory doesn't hold.
A big question, Mike, how quickly these economies can continue to reopen, even in places where they've actually dealt with the pandemic rather well, in the opinion of many. Hong Kong headlines dropping across the Bloomberg right now that Hong Kong will cap all public gatherings of 4 people because of this pandemic. They go even further. They will ban dine-in services at eateries from 6 p.m. to 5 a.m. They will shut gyms and game arcades as well for 7 days, Mike. This just underlining how difficult it is going to be to A, recover quickly, and B, normalize anytime soon.
Yeah, we're definitely seeing that in the United States with the southern tier of states now bright red in terms of spikes of the COVID virus, and states that did not want to shut down starting to roll back their reopenings, and that's going to have an effect on jobs. The home base people who measure small business employment showing a definite leveling off and is starting to turn down in those states. It just means that we're entering kind of a phase 2 of the economic recovery, if not a phase 2 of the pandemic, and that is companies come back, they either have to close down again or they find they can't make it and they start laying off workers again.
You know, this is so important. I mean, John, that Hong Kong news is really difficult. I love going to American Pool when I'm in Hong Kong. They've got, you know, the arcades in Hong Kong are really, really different from anywhere else in the world. Michael McKee, furloughs and layoffs. Give us an update. Where are we?
We're starting to see a tremendous number, Tom. We saw over the past week that Wells Fargo announced 36,000. Well, Wells Fargo announced a plan for thousands of jobs. United Airlines, 36,000 jobs.
Layoffs, firings.
Harley Davidson, awful lot of layoffs and firings starting to be announced because demand is not returning at the same time as employees. Yeah. And this doesn't count all the restaurants that tried to reopen and maybe don't have the business, and people will be laid off. The National Federation of Independent Business, the small business people, say 22% of their membership expect to fire workers even after they've reopened.
Okay, John, this is the mystery. Michael McKee, thank you so much, our chief economic correspondent. John Farrell, to me, this is the mystery of the end of July, weekly jobless claims into the July jobs report, and what Mike McKee just said there, to me, other than the pandemic, is the most emotional thing.
Well, the claims have stayed elevated throughout all of this over the last several weeks. Even at the net change at the headline number in the payrolls report over the last couple of months has really surprised to the upside. Tom, the story is the churn beneath the surface. The temporary workers have started to come back into the workforce as we reopen in the United States. But the real story about the scarring is in the permanent layoffs, Tom, and that's been building over the last couple of months. And I imagine, and I don't like the idea of it, but I imagine in the months to come as well, that story will continue, Tom.
There's no question about it. It's going to continue forward. And, I look at it all, John, with the labor economy folding into what we see in the stock market. Futures up 22 right now, and it's really maybe more than any time I've ever seen. It's two separate worlds.
We advanced 0.7% on the S&P 500. I'll whip through some of the price action for you, Tom. We do not change on the headlines coming out of Hong Kong. We stay elevated, up by 22 points on the S&P, up by around about 0.7%. Outside of equities, if we can get to the bond market, I'll run you through things pretty quickly. Some data to look out for in the week ahead. We will have CPI coming out tomorrow and retail sales in America coming this Thursday. Ahead of that, pretty muted price action. Your Treasury market pretty much unchanged. Your 10-year yield coming up just a single basis point. On a 10-year, we advanced to 0.653%. That's the Treasury market. In the FX market, huge focus on Europe through the week. The ECB decision coming up this Thursday, and then fiscal authorities, European leaders meeting this Friday and into the weekend. Can they find agreement on the next steps? Ahead of that, euro-dollar positive. We move higher on the euro, just a slightly weaker dollar. 1 hour away from the opening bell, the conversation continues on the economy. Lewis Alexander, Nomura chief U.S. economist, joins us next from New York. This is Bloomberg Surveillance.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is Millions of people in the UK struggle to put food on the table. That's why Asda's donated £23 million to Fair Share and the Trussell Trust since 2018. Please help us do more by donating to our Fight Hunger trolleys in store. Asda, we're all in this together. Fair Share and the Trussell Trust are registered charities. See asda.com/fight hunger.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Monday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
And action.
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
There's a lift to this market this Monday morning. Good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro from New York. We're live on Bloomberg TV and radio, 1 hour away from the opening bell in New York. Here's your price action. Adding a little bit more weight to the equity rally of the last couple of weeks. On the S&P 500, we advanced by around about 0.6%, up 21 points. Call it 20 points higher on the S&P 500. The financials rallying into earnings. JP Morgan up at a pre-market by 1.7%. Amazon, Cowen with a new street high price target, advancing to 3,700, up 3,200 right now on Amazon, and up around about 1.8%. So big tech doing nicely this morning, Tom, and a financials firmer going into earnings season as well, giving futures a lift, advancing 0.6%.
Yeah, nice lift to the market. Maybe not what we saw an hour ago, John, but nevertheless up. It's really got a huge correlated risk on feel. Right now, what we're doing on a Monday is we're resetting, and you can do that with the chief U.S. economist for Nomura Securities, Louis Alexander. He writes exceptionally thoughtful notes, all of this with his backdrop of public service to the nation as well. Dr. Alexander, thank you so much for joining us today. I want to go to a single sentence buried in your report, which is a brilliant summary on the uncertainties of China. Now, we've just seen the virus news out of Hong Kong, but away from that is your exceptionally tepid call on the second half for China. Can that derail global recovery?
Look, I think the concern about China is it's actually quite vulnerable to what's going on in the rest of the world. And in some ways, they were relatively successful at dealing with COVID-19. And the problem is their recovery at this point is constrained by what's going on in the rest of the world. So in some ways, I would draw it the other direction. China can't do more unless the rest of the world recovers and export demand picks up. And at that point, that's the real constraint on China.
Tell us about export demand. Bloomberg has a wonderful summed world trade chart, which, as you know, over the last decade is just flat out grim, ebbing. We're going away from what we knew in our childhoods. Give us an update on the state of the volumes of world trade.
Well, look, we had a kind of 25-year period when trade was growing much more rapidly than global GDP. That actually stopped a while ago, and to a certain extent, we've been in a period where globalization has not been the same kind of impetus to growth. Now, obviously, with COVID-19, everything has collapsed, and that's just a general function of activity around the world. And the problem is the parts of the world that are more dependent on trade than any others, and China's the head of it, has been, in some senses, constrained by where we're going to go going forward. I think one of the big questions after the U.S. election is what's going to happen with trade. You heard Vice President Biden last week talk about this Buy America program. He didn't talk about trade policy in great detail last week, but if you look kind of across what he's saying, I don't think we should expect some big change, some big movement back towards a commitment to free trade that you saw under previous Democratic administrations. And so while I'm hopeful that we'll get a cyclical recovery as we all recover from COVID-19 over the next couple of years with vaccines and all of that, like, we're not going back to that period when globalization is really driving the global economy.
Yeah, well, Lou, ahead of the election, we're also going to be getting a lot of unemployment figures. You're expecting the unemployment rate to fall back down near 10% by the end of this year, and yet some of the soft data, the high-frequency data that people are looking at, show an increasing weakening in any potential bounce back. How much does that play into a potentially higher unemployment rate, in your view, at the end of the year this year?
So, look, I think there's certainly the risk of that, and I would totally agree that the high-frequency data is pointing towards a moderation and potentially even a decline over the next coming weeks and months. But I would note that the potential for lockdowns is regional. It's not national. It's very different from what we saw in March and April. And we think there will be a continued recovery. We expect to get a phase 4 fiscal deal within the next 2 weeks, and that will be important to sort of continue this on. So I would note the fact that continuing claims for unemployment have continued to come down, even in an environment where initial claims remain very high. There is an awful lot of reallocation going on at this point. And look, there's a huge amount of uncertainty about where the economy is going to be. I would note that even at 10%, that's still the peak of where the unemployment rate was a decade ago.
Yeah.
And so while that is recovery from where we are now, that's still a very adverse outcome.
Lou, you said that you expect a $1.5 trillion fiscal add-on at some point in the next couple of months. I want to talk about the composition, because a lot of people saying the enhanced unemployment benefits had the most direct effect on economic spending, on just the consumer outlook in general. How important is the composition of that $1.5 trillion package that you're expecting for your outlook to be correct?
It is important. I mean, there are different pieces to it. Obviously, you have to do something to make up for the unemployment benefits that are going to come off at the end of July. I think it's unlikely that they will be extended in exactly the same form that they are now, but you need something that replaces that. That's one thing. Second, you do need more support for small businesses, essentially some sort of additional resources that go to support businesses directly. You need also money for state and local governments, because all of the talk of potential layoffs in businesses, if we don't get more support for state and locals, you're going to see the same thing on state and local governments. I think those three pieces all have to be there for this to work. Now, there's also been discussion of another round of tax rebates. To the extent that that's general support, it's not a bad thing to do that. But in some sense, I think you've got to have that. Extend the unemployment benefits, more help for business, but also state and local governments.
Lou, you've gone through a series of issues there. To some degree, you need to read the political tea leaves to answer the following question, but I wonder on what particular issue you think this effort might come unstuck.
I think there are some questions about how you define the unemployment benefits and the support for business. There has been some criticism of the very high replacement rates for the unemployment benefits, so Republicans want to change the structure of that. If they really press that issue, that could become a stumbling block. I think there's also a question of what businesses are going to have access to the support. There's obviously been some criticism of the PPP program. There's some restrictions that the Democrats want to put on that. There's also this liability issue that's been important to McConnell, depending on about giving businesses essentially liability protection if workers get COVID for coming back to work. How you define that, those are all issues that if strong advocates on one side or the other of those really want to press the issue, they can delay things. I'm hopeful that everybody recognizes how important this is, that this will get done, and it will get done quickly, i.e. before the end of this month. That's our expectation, but if we're wrong about that, that'll be a big deal.
Lou Alexander, to go back to James Tobin, the giant of Yale University, there was a book years ago, it always comes in a slowdown, Is Growth Obsolete? Away from the selected tech names, is growth obsolete?
I think very much not. Look, there's another old economist who's important here, Art Oken, who stressed the importance of the gap between actual employment and actual output and potential output as being essentially this social loss. I think this is one of those times when that's very, very important. We've got an economy that is underproducing. We've got an awful lot of people who are unemployed. That's a huge cost, and any things we can do to diminish that over time are very important. That's another way of thinking about that growth question.
Position closed on Japanese yen at 107.161. I have total profit £1,000.
Second stage of this shock is the more persistent, extended period of time of being below potential and below capacity. You remember we caught up with Bridgewater's Bob Prince just a couple of weeks ago, and he talked about a duration mismatch. The episode could be 18 months long. The Band-Aid is just 3 months, 4 months of fiscal responses to all of this, Tom. And this Band-Aid essentially expires in many ways at the end of this month, and then we've got to apply another one, and most likely another one. Will the collective will to do that be there into 2021?
Different cultures are doing this better, John. I think the United Kingdom's actually doing it better with maybe a more constrained and closed economy. John, what's so important here is just the blunt instrument of percent of GDP. How much of this is Washington helping as a percent of GDP? And the answer is they're late right now. They've got to catch up.
Well, Tom, this is the issue. You mentioned Europe, and Lisa, I think you can weigh in on this. The subtle differences in the fiscal response to all of this. Europe has made a much bigger push, put a much bigger emphasis on huge, broad-based furlough programs, keeping people much closer to their employers. We did it to some degree with a small business program here in the United States, but not to the degree Europe has done it in. And it makes some people more constructive about the future in Europe, that we've managed to keep people closer to their employers, perhaps on the continent, than we have in the United States. The United States puts much more emphasis on the direct offset to the shocks to income. So that would be the checks to Americans and the enhanced unemployment benefits as well. The problem with what the US has done is it might have propped up consumption over the last couple of months, but it expires month end. And some of these programs over